Well, good afternoon, investors. Welcome to the mid-October 2022 bull session. My name is Mark Robertson. I am joined here by Ken Kavula, my colleague and partner in the adventure of investing for a few years now, Ken.
Quite a few years, Mark. I hate to think back when we first met each other, but it was way back when it was a long time ago.
It was. Well, we did, among some of the achievements of the last few days, Sean Mace did visit us here for a couple of days in Michigan. So got to spend some time with Sean, and he was amused by the number of times. Now, keep in mind, Sean is half my age, Ken. I would talk about something being years ago, and to him that means 3 or 4 years. And we would discover time after time that I was talking about something from like 20 years ago or 30 years ago.
A few years back were decades for you, Mark. Decades.
Yeah. There's when it's capital Y years, I guess it's decades. I don't know. So
Sean, that's what happens when you get to be Mark's age. Time compresses itself.
So when he starts saying, "Well, see, yesterday," when he means a few years ago, when he means a few decades ago, then we'll start worrying.
Yesterday could be as much as 5 or 8 years ago, so don't worry about it.
There are times when that type of a time distortion happens, and it's not just limited to software development, that's for sure.
And it's not just limited to Mark either. So
no, that's very true. All right, well, we're dedicating this session here today to the reality that we can handle the truth. We'll spend once again a few moments talking about how we basically don't notice the vicious cycles and swings that the market goes through on a daily basis. And the way we do that is by the second half of that statement, remaining in good company. And that has to do with this community. We're grateful to all of you for the type of things that you bring before us and help to remind us to discuss over these years. There you go, Sean. It really is important, this power of community and leaning on each other for ideas. And it really is a wellspring of patience and discipline in that regard.
Mark, identify the black and white photograph. I'm not coming up with a name for that one.
Okay, well, the guy in the middle of the picture is T. Rowe Price.
That's why he didn't come up with a name.
Yeah, we will. Yeah, he's kind of hard to find pictures of, by the way. T. Rowe Price Jr. He's actually regarded as one of the grandfathers or fathers of growth investing. And we won't cover one of his funds here today, but it will be part of the fund roll call over the next 2 weeks. T. Rowe Price's New Horizons Fund can be a source of best small companies. So we'll be checking in on that one. I would have done it today, but just simply ran out of time. So yeah, that's T. Rowe Price, person to know. And again, along with a couple other key individuals, you hear the names often, David L. Babson, George Nicholson. They're all part of that. Won't call it the greatest generation, but certainly a great generation when it comes to the realm of investing. So yeah, Ed Harris continues to watch over our rabbits. We continue to hope for the best. We'll talk about it here in a few minutes. We did actually gain on the stock market, but we're like 2 touchdowns down. The other team has the ball, and there's about 3 minutes left on the clock, Ken. So we're down to really needing mayhem on the field or something. So Gene Wilder is just there. We're going to talk about Wonka a little bit too, and a couple of questions from the mailbag if we have time. And I'm sure we will. Here's our standard disclaimer. Keep in mind, if you're out there, especially for the first time, no investment recommendation is intended. This is all about demonstrating and illustrating principles, methods, techniques, and literally philosophies of the modern investment club movement that are 8 decades. That's a lot of years, Sean, in the making. We have not personally been there, but we are basically using the lessons of the modern investment club movement over those 8 decades, attempting to understand them and share them with our friends and family. Please do your own homework before making any decision. We will try to remember to disclose if we actually hold the company that we're talking about in our personal portfolios. We do a roundtable. It's a webcast. It's free. It's usually the last Tuesday of every month, 8:30 Eastern time, where we do provide 3 or 4, maybe even 5 companies where we subject them to this time-honored analysis. And that has quite a track record over these last 12 years. If you'd like to be added to an email reminder for that event, again, it's a webcast, ncavula1@comcast.net. If you have any follow-up to today's session, my email address is markr@manifestinvesting.com. Ken's is kcavula1@comcast.net.
I'll be celebrating a number that's awful close to those 8 decades, Mark. Closer than I ever can believe when I think about it rationally in my head next Tuesday, however. So I'll expect a slide with a birthday cake on it, okay?
That can certainly be arranged.
All right.
So are you willing to disclose the number of candles I need to go out and buy?
Well, it has to do with the Music Man. All right, we'll leave it at that.
You just need a few candles. You just need a few candles.
Just a few, yeah. I gave you a big clue, though, Mark. It has to do with
the Music Man. Okay, I will look it up. It was a few years ago. All right. Again, here's our slide taking a look at the general tendency of the market over time. The green bars are the stock market as measured by the value line arithmetic average. They do zig, they do zag. We notice the holes underneath the blue line and the times when the green bars actually project above the blue line. We believe basically that the green bars will return to the blue line at some point in time in the future. The red dots are the average forecast, as if you stacked up all 1,700 companies covered in the value line standard edition and basically expressed an average forecast for what's in the book. So you can see that red dot has been bouncing around. It's actually a little bit higher than its long-term average, but that also will settle back in at some point in the 10 to 12% range, but it will bop around a bit. And we're used to that, and we're not surprised by it.
Old Joe Whitaker's already figured out the clue, Mark.
Well, it won't take. This audience has a few years of experience, so we can. All right, I thought we might start a little bit of a tiny mini feature, because I actually have received a couple of notes this week, which basically said, "Wow, I didn't even realize you were doing that." And since it is something that I think can be helpful especially as if you're a stock watcher for an investment club or just simply watching a particular holding in your personal portfolio, every week we put out, it's usually out by Monday morning at the latest, if not earlier that weekend, a weekly edition of expected returns. And in that, just wanted to point out, if you click on it, you actually zoom into and you can scroll down to what companies are reporting earnings. One of the reasons I wanted to bring this up this week is it is a pretty important week when it comes to earnings. Bank of America, Wells Fargo last week, and a couple other banks have actually come out and had pretty favorable reports about the economic impact of what we're going through possibly not being as bad as a lot of people think. Now, I know that was a lot of weasel words there, but that's what many people are blaming these last few days in the stock market for, these 500, 1,700, and 1,100 days to the upside. But there's a lot of key companies on there. Tesla comes out tomorrow. Might even talk about Tesla next week a little bit. But a lot of fairly key companies coming out with earnings this week.
Nice interview this morning, Mark, with Johnson & Johnson's CEO, who also had a number of more than optimistic things to say about segments that his company kind of dabbled in and worked in. Much more positive than I would have ever expected a CEO of a major diversified company to be. Really, really good interview early this morning. Their earnings must have come out right before the bell.
I think they did.
When it finally happened. But if you can get a hold of the interview and replay it, a really good interview with the guy. His name escapes me at the moment.
Yeah, I don't remember off the top of my head either, but I know it. If we were playing Trivial Pursuit, I would know it if you said it. Okay, and the other thing I wanted to point out is we will actually go and get perhaps a news blurb on the Johnson & Johnson report from this morning and put it in the stock forum. I actually will come back to this page. It's always an evolving page during the week, and actually provide a link to Johnson & Johnson so you can actually follow that. So we don't do it for all the companies, but for some of the key reports that come out. And the example of that here is Deckers. Deckers was in an article in Barron's magazine this weekend. It's a pretty decent article, pretty optimistic about the company. And this is actually a hot link on the website that takes you to our analysis that basically follows up on this article, which is quite bullish on Deckers, not being just Uggs. Although, Ken, weren't you just saying that you've got all kinds of Uggs on your Christmas shopping list this year?
Yeah, they aren't shoes. My granddaughters are asking for big fuzzy blankets. I mean, big ones, and real thick, soft blankets and pillows and bedding and all kinds of things. They're at the point in their lives right now where they're beginning lives of their own and trying to stock apartments, and they've discovered that one set of sheets just doesn't cut it anymore. So, and they've also discovered how expensive a set of sheets can be. So Uggs has appeared on a lot of the Christmas lists.
Yeah, so they're doing that, and obviously this article compares them to Nike and Under Armour and that sort of stuff. Sean actually wears Hoka running shoes, so this is an area that hits pretty close to home. They look pretty comfortable.
Our friend Kay Light says that they're also extremely popular shoes for aging feet as well as for runners.
Wonder how they do for tennis. I'm going to have to look into these. All right, so we basically take any company, when you see a hot link, and we basically put, this is a page right out of the forum. I posted this morning, very short closing paragraph from Value Line. They like the prospects of this company, which I find kind of interesting because it's not supported by their numbers very well. And that happens from time to time with Value Line. But, I mean, I look down here to the long-term forecast, and their long-term forecast, maybe they just simply have forgotten to update their long-term price forecast, but that doesn't necessarily rhyme with his words up at the top. Either that, or maybe there's an element of trading, a 6 to 12 month mentality in that comment. So here's our look at Deckers Outdoor top to bottom business analysis. So you can see that the quality's been quite strong. Even if the quality had dipped a little bit there for whatever reason a few years ago, I would say that the trend is quite favorable when it comes to quality. I don't find the return forecast to be quite as high as we have liked as a community in the past, but it's certainly no kick in the teeth at 10%. And again, that's based on a sales growth forecast of 9%-ish, and that rhymes with the red trend line that you see down here. Again, a fairly steady projected net margin in the low teens, a perfectly reasonable PE ratio for a company like this. So again, a 10% forecast seems to make a lot of sense. A nice, excellent quality rating, projected return on value that I think corroborates the projected annual return forecast fairly well. We would probably like to see this company trading down closer to 250 before it would really get our attention. It's currently trading near 350. They have no debt. They are fairly low in their annual price range for the next year, but not incredibly attractive from our perspective. The price has been a little bit warm, as illustrated there by the relative strength index. Remember that you saw that when we get to the Q&A in a few minutes. But here you see that the Morningstar analyst and the rhinos basically shared the opinion expressed in this article. And that's what's basically driving that article. Yeah, we like it. We probably don't like it as much as them until we see some other stuff. But it just gives you a way to look at the companies through the perspective which we share. Any thoughts on that, Ken?
Well, I'm drawn to Prove right away, and I think that Prove is fitting in real nicely with the par value that you've calculated. I like it when they're both, within 15, 20% of each other, either high or low, doesn't make much difference. I also like the diversification aspect of this company, that they're not resting on a single product. We used to own Deckers maybe a dozen years ago, and kind of moved away from it when they were having difficulty with the Uggs brand translating into high fashion and staying there for a reasonable period of time. They became extremely popular, and then they weren't. And that really impacted earnings. You can kind of see it going
Yeah.
down there in the 2015, 2016, that period of time.
Yeah, what I'm bracketing in is that
Yeah,
time frame, and you can see that
yeah,
probably accounts for that little blemish. Again, it's not major, but also
yeah,
notice that their return forecasts kind of got down in the low single digit area. So
yeah,
I know
yeah,
there's more than a few people in this audience that liked it a lot, bought it back here, and basically gave them a timeout, and they
yeah.
would willingly come back if this continues to improve as suggested. I mean, the company did go from the 20s up to I'm not sure where they actually topped out at, 300 something, I believe.
I will just double down on what you said, Mark, about it's still not a company that is attractive enough to make my even my one before my final list of companies that I'd like to own. There's just not quite enough return coming from it at this particular point, at least. But a very interesting company, and much more. Much stronger than I remember it being when we sold it.
Yeah, and again, if you look at this time frame out here, including the estimates, these guys are getting strong, progressively stronger,
Yep.
and it's
Yep.
interesting to kind of watch. And if that stock price continues to plateau and stay flat on the Mesa, it could get interesting once again.
Yep.
But we're just a little more demanding than, I guess, the average rhino, perhaps.
Well, those margins out in 2025, 26 intrigue me as well. If they're moving to a lot of different products, maybe they're moving to products that have a higher margin attached to them than maybe a typical shoe would have.
Mm-hmm.
Uh,
Good stuff. All right. So again, the reminder is you can get to that from that link, and it is in the stocks forum. And as the next few days go by, a number of those references on this page will actually become hot links to the actual current reports on the company. And yes, Marty, we hope to put that at your fingertips very soon for any company you want. All right, here's a quick moment with our groundhog. Ken was mentioning that the dashboards on Manifest continue to drift further away from these. Sorry, I just can't keep up with the dividends on every single account. So, but these are the current, including all splits and dividends, and any companies that are not covered at Manifest Investing. So, these are the official standings. The others are estimates. What grabs you here, Ken?
Well, it's disheartening, Mark, that that number of entries beating the market stays at in the low 20s. It doesn't seem to have any traction to it, even with these up days that you tend to remember. I guess that at least from my mindset, I must be tending to forget the down days that have balanced most of those up days out. And in fact, the trend has been pretty negative for a couple months again now, from those highs that we reached in late August, early September.
It'll be August
So
16th.
yeah, those that's just a really atypical performance for the people in this contest, and especially when you count 4 or 5 or 6 of these being the professional entries into the contest.
Yeah, we're not used to the rhinos hanging out with us at the top of the list.
Yeah,
It's not comfortable. And I'll just cross this one out so you don't have to read it.
that monkey again up at 11.
We'll
Okay.
just get rid of him. But
All right.
Kay Light, who is definitely in the audience, I suspect. I believe that's a set of selections from her husband that leads, and it's a fur fight to the finish over the next several months. Herb is in there, and Lisa, our own Kurt Kowitz. I believe, yep, Sean's back in the top 20, so we'll have some fun here over the next few months.
And I'm beating Jim Cramer.
Yeah, I know. That's your major benchmark, isn't it?
That is. That and the monkey.
And the monkey. All right, we'll keep going. Kathy's still in last place. I've never seen anybody inhabit last place.
I see that Cy has crept onto the list here. That's nice to see to see one of the knights up in the top 40. I'm sitting somewhere down around 45, 50, 55 right now. So I need to get I don't need to do anything. I need my stocks to get themselves in gear.
Well,
get moving up that list,
As I have bragged in recent weeks, I have moved up like 30 spots or something like that, but my name's not on here yet. So that tells you where I'm coming from. This is the light at the end of the tunnel that I'd like to get to, but I think the dream is fading. All right.
Well, Mark, the Stock Pickers contest, Mark, ends on Halloween, October 31st. That's the Mid-Michigan contest, and it has about 40 entries. And it's historic, Mark, that your name is not at the very bottom of the list this time. So,
oh, well, good. There is hope.
We have to print a new certificate just for you, okay, to present.
If
anybody anywhere near Saginaw on November 12th, we're doing a breakfast in the morning. We're doing that breakfast, folks, whether we have 20 people or whether we have 120 or whether we have 200. It's been canceled 2 years in a row, and we're not going to cancel no matter what. We're going to be real stubborn about it. So feel free to register for that breakfast. If you're anywhere near Saginaw, we plan on having a good time, and Mark's going to give us a really entertaining presentation. I'm positive about it. So.
All right. Well, speaking of being entertained, I stuck this one in here again in the spirit of context, because the groundhog we've got 4 months to go. Here we've got 2 weeks, and these are the current results. So you see how unusual they are. Special, if you want to use that word, they're as special as 2008, and
Sample size.
And we are running out of time here, but the last 7 years have been great. We were hoping for an 8th straight year. Our best small companies have beaten the market the last 7 years, and we're frankly coming down to the wire this year and hoping for the best. But in context, as it says down there at the bottom, even including this year, which has been weak, the average annualized return is 14.2 versus 10 for the market. Again, that includes this year's humbling entry.
You think all of our work with best small companies is in line for the next award in economics from the Dynamite people, Mark? What do you think?
Yeah, I've kind of lost faith in that whole process here in the last few years.
They gave Bernanke one, so
I know. Well, maybe somebody out there in the audience place us in nomination, and we'll see what happens. All right, here's where the carnage come from. Again, Ed Harris is running shotgun, trying to bring us home like Apollo 13. Again, a fairly typical year in that we have some at the top that have outperformed the market and some that really haven't at the bottom. What it all nets out to be is that our traditional buy and hold portfolio and our actively managed, that's the one shown on the screen, continue to lag the Wilshire 5000, and they are definitely in line with the bear market that has hit the Russell 2000 smaller company growth exchange traded fund. So you guys all know the drill. There's some companies on there that just have not done very well. The Boston Beers, the iRobots, even though they're getting acquired. Kim pointed out that Southern Missouri Bancorp is in the middle of an acquisition of another company. I was kind of hoping that somebody else would buy Southern Missouri Bancorp and offer $100 per share or something, but that doesn't seem to be happening. And if you are out there buying one of these companies and listening, we need you to do it by Halloween. All right. Any comments on these, Ken, or should we just keep
Well, no, just keep
chugging?
on plugging away here, Mark.
All
Okay.
right. So here's a reminder of where these ideas come from between now and Halloween. We will continue this quest. We'll jump in on a couple of these. I believe that my 2020, I think 2020, 2021 version of the Hoover's Emerging Companies Handbook is in my mailbox. So that will be on the agenda for either next week or the week after that. It's been a couple of years since I actually went page by page and looked for a new exciting company to follow. And then, of course, we'll talk about the Forbes list from last year here in a minute, but we'll be kind of trekking through all of these sources, looking for that hidden gem or needle in the haystack, including social media, other places where we discover companies. Pretty sure that Fortune will be out with their list here shortly.
Well, Mark, I was just going to ask a question about that because I went looking for the 2021 list from Fortune and could not locate it. I'm wondering if they stopped at 2020 and didn't do it last year. Were you able to find the 2021 list?
I'd have to go back and refresh my memory. I thought we did.
Okay. All right. I'll keep searching. I admit that I didn't spend more than 3 or 4 minutes looking for it, but if it's there, I'm sure I'll be able to come up with it.
That's next on my list, and again, that'll be either next week or the week after that. Usually, Marie Frank nudges us and lets us know when it's out there, also. So I know that she's out there watching. And
Well, I subscribe to Fortune and Forbes, both of them, and I've been kind of keeping a close eye on the paper copies as they come in, and nothing of interest. We just got the 300 richest people in the United States from Fortune, but nothing on the best small here yet.
and I wasn't on there, right?
No, you weren't on that list of the richest people yet.
Well, then I guess I have to go back to work.
Yeah. Not Matt came up with the Forbes stuff, and yeah, I know the Forbes stuff is there, Matt, but the Fortune stuff is the stuff that I'm looking for. Oh, he corrects himself. He says, "Oh, Forbes, not Fortune." Okay. All right.
Sometimes it's hard to keep track. All right, here are
Yeah.
some of the companies that we've mentioned over the last several weeks. They are sorted from highest manifest ranking. Again, that's a hybrid index-like treatment of the forecast, the projected annual return forecast, and their quality ranking, so that those two things are basically rolled into this column here, and we rank based on that, just as a general guideline. Because again, our principle with best small companies is we have the same expectations from our small companies as we do the established companies. We do want to see consistency and some track record, but a really positive opportunity field for any company that we look at. So rank from top to bottom. Littelfuse, I'll probably be lobbying at some point to be allowed to put a $2 billion company on the list as long as it has a growth rate of 12%. Certainly still qualifies. Ken and I will be wrestling over whether or not that can be done. The other thing I'd like to propose, Ken, is that we aim for 12 companies instead of 20. We picked 20 last year, and 8 of them were really bad. So what I'm thinking is we
So
stop.
you're hoping if we pick 20 and then only go with the
Yeah.
top 12,
Why
right?
don't we just stop picking right here? We'll leave these off, and we'll be fine.
I don't have any particular. That's an interesting way to look at it, I guess, Mark. Okay.
Well,
Yeah, I wanted to just put out in front of the audience something that came from when Better Investing added assets and return on average assets to the SSG for banks and, well, for all asset-based companies for that matter. But when it added those numbers to banks, we had a couple of ticker talk programs. That's one of the monthly programs that I do for Better Investing. And we had Ross Meredith on the program, who's a former bank examiner. And he gave us some metrics for judging the size of banks. and he suggested that you didn't want to use the traditional sales number that came in the data, but rather you wanted to look at assets when you were judging the size of a bank. And he suggested that bank examiners have a kind of a dividing point in their mind at $10 billion between small and medium-sized banks. So I'm going to be kind of thinking about that in the back of my mind as we look for asset-based companies to put onto our list. And I'm going to expand the universe a little bit more, maybe contract it in a couple places too, but I'm going to suggest that I would like to see assets under 10 billion if we're going to consider it a small bank. You might want to think about that if you're interested in banks out there. He also said that there was a dividing point in most bank examiners' minds when you got up around 100 billion. That was the dividing point between a medium-sized bank and a large bank. And then, of course, there were 7 or 8 banks which were classified as mega banks, and they were so large that they weren't even considered in the same category as the normal bank was considered. You know the banks I'm talking about: Bank of America,
Yeah,
Wells
money centers.
Fargo, Citigroup, the money center banks,
Mhm.
right? JP Morgan, those types of banks. So it's interesting, and because we're doing something that Forbes never did. Forbes never placed asset-based companies on the best small company list. Because we're doing that, I think that it's okay for us to develop a little bit of a little set of rules to go with our decision to put those companies into the mix.
Yeah, and it's been true for the last couple of years. Western Alliance was our top selection from last year, and there's been quite a bit of bolstering by these financial companies. So that's why they're welcome here. And Ken does kind of obsess over them, so we have to tolerate it.
Well, I learned at the feet of my friend from Pasadena when he suggested he wanted to buy a bank. Up to that point, I had never even thought about putting a bank in my portfolio. And then suddenly in the year 2000 something, 3 or 4, Hugh McManus comes to the podium and says he wants to buy a bank. And I'm saying to myself, well, why don't I want to buy a bank then? So it's been an interesting ride from that point, the last 20 years or so.
Yeah, a few years have gone by since that day.
Yeah, just a flash in the pan, Sean. Okay.
All right, so we will be whittling this list down, but and continuing to add to it as we whittle between now and that time frame. And again, probably focusing more on a little bit of a more concentrated set of companies and giving it our best shot. Here's an example of one of those sources. I wanted to do this with New Horizons, but forgot. We'll take care of that next week. This is a fairly famous regional banking fund, but they do extend up into the money center banks. Many of those are quite large. You recognize a number of those ticker symbols on the left. But this was the fund run by Michael DiCarlo back many years ago, and the lady who succeeded him was equally gifted at doing this stuff. And you can see that over the last roughly 10 years, they have brought in an 11% return, just barely under the market. This is a high quality, very well performing fund over the years. So we do like to watch and see, what's capturing their attention. So I actually went into the fund, not shown on this list, but those banks that are mentioned there have been added within the last year. So they automatically just why not check and see, what can we see using the way that we look at banks and asset-based companies. And
Mark, are you talking about the 4 at the bottom or the entire list?
the 4 at the bottom, because there's a
4
lot
at the bottom. Okay,
yeah.
right.
And I think those 4 at the bottom do qualify. A couple of them actually make it fairly high onto our list, and I'll rely on you to run it through your gauntlet also, Ken. But
Well, it's interesting that I look at growth before I look at anything else, and I went down that growth column looking for double digits. I only found one. I go to the left, and there it is. It's WAL. So
Mhm.
I they must be using some of the same kinds of ideas that we're using to identify good, high quality banks.
Yeah, and the only reason it's not on the bottom is that Western Alliance has been a few years
Yep.
in this
Yep.
particular fund. Yeah, I also can notice that also. Thanks for catching that, Ken. First one that kind of jumped off the page at me also. And that was very good to us. And then I just wanted to point out that they did bring back the list at Forbes last year. They bring it out around Thanksgiving, as opposed to in the past doing it around Halloween. Believe it or not, you can actually access that list at the link at the bottom. But we'll also scour this list again and double check ourselves. Ken actually did cover this at a bull session,
I
probably
Mark,
last in December.
I don't know if I covered it at a bull session because it was after we did our small company work. I know that I scoured it looking for companies that weren't in the Solomon database.
Okay.
So that's as far as I went with it. And I know that I did not include a company if it didn't have at least 2 years of publicly traded data to go with it. So, but I remember scrubbing this, and I don't know if I still have my notes as to what we sent in, but I know that you did add a large series, not a large, but you added a half dozen or so companies to the database
Yeah.
from this list that we weren't covering before.
Yeah, I recall adding a number of these. Most of these are covered at Manifest Investing. Um, there's a fairly large number of these that would probably qualify for, they might be good small caps, but they're not good small companies by our definition. So be careful out there in that respect. But I remember adding Lemaitre Vascular at the center of the page there as a result of that effort. And that's one that has appeared in a number of groundhog portfolios also. But there's a number of companies on here that are in our list for this year. But just want to make sure no stone goes unturned. Here's one that I brought to the portfolio. I thought it was a new idea a couple of months ago. It's actually done okay. So from top to bottom, we will be checking these out, and I do think it's probably a pretty good source of study ideas in general.
No doubt about that, Mark. It's a great a beginner's source for coming up with 15 great ideas. Not all 100 are going to be things that are going to fit this, our idea of consistent growth, but we're going to come up with 12, 15, 18 great ideas from this, and that can keep you busy for a long time.
I'm going to be pushing for 12, everybody. He keeps moving the number up, so watch us. Here's a look at one of those companies, the number one company from last year's Forbes list, just again to give you some perspective on, sometimes there's very little actual operating information, and in the absence of estimates, there can be very little information on some of these companies, and Ken would be less likely to even look at them if they don't have much information available to us as investors. But this is basically a chiropractic practice in the Southwest, and something that I can relate to after tennis last night, Ken. It is not the form of recreational tobacco in the title. It actually refers to the joints in the human body and what chiropractors do to them. But again, from the thing that is really compelling to me on here is look at this. I mean, wow. And the profitability has really kind of stabilized at a really nice level. Not too sure what to think about the difference between the two, but it's something that would be worthy of further study, but not too bad. I would, much like Ken has been suggesting, I would really take a hard look at that number and probably knock it down in my own personal study to be closer to so that the projected annual return came in closer to that number. Pretty simple, but pretty decent company. But we do like to see, that's probably the lead. We want to see at least that much information on companies as we're looking at them.
Yeah, at least that much. And I really, if there's not very much current information, current and recent past, then I would like to see some longer term uh, uh, estimates going out there. And this one, I like the history of sales, but I know that how do we politely say that we can't verify a lot of those sales because they never were reported to anybody?
Yeah, I'm not sure. I mean, I have to go back to all their annual reports and make sure that they fell into that venue. But
Well, would they have even necessarily had an annual report, Mark, if they
well,
weren't being traded?
it's publicly traded since 2014. So
Oh, this one goes from
yeah,
2014.
here you
Oh,
go.
well,
Yeah, they're
then I
publicly
don't have
traded
it.
back here.
Okay, then I don't have any problem at all looking at that, and I do like that sales line. I like it a lot. It matches this concept of explosive growth, and when do you hit it? And it became profitable and then stayed profitable. That's good news. So
Yeah, and this dip that we're looking at here in earnings, I think I'd want to understand better what's going on. There is probably some uh, vulnerability to COVID, and again, we've talked about it before. In the medical field and dental field, there is such a backlog because people were basically hiding in their basements for so long, in many cases avoiding treatments, which probably weren't as elective or discretionary as they thought. And we'll go
yeah,
through this without talking
I'd
about my
point at
team.
that. I'd point at that 2021 number also that probably has some depression going on because of COVID, both the 21 and the 22 number.
So studying this company a little bit deeper, it might be interesting to see what they have to say about that. And again, I think that's one of the reasons that as we go through an exercise like this, the medical device and the diagnostics and analytical tool companies are really compelling to me for this very reason that there's got to be so much pent up backlog on some of these procedures. All right, moving on. Here's a quick look at our we refer to it as the janky utility reserve, just giving you a look at the ledger. Don't try to add up these numbers. I've actually taken out a few of these just to compress it. So there's actually a break in here, actually right below that line. But the intent of this was to pick 5 utilities, basically deploying about $45,000 across 5 utilities back a year and a half ago to generate dividends to pay the utility bill and then basically see how that goes. I think this has exceeded our expectations in terms of how well the companies have done versus the market. And notice that we have made every payment, including jumping it up from 110 to 119.57. Every monthly payment has been made from the pot of cash, which stands right now at 528.68. So there's been no problem paying the bills and the taxes. And the dashboard at the bottom shows you the current fundamental status of all of those 5 utilities. Nothing certainly anywhere near a sell consideration. What grabs you here, Ken?
Nothing except that this is one of the most interesting simulations that I think we've ever done, Mark. I'm blown away by the fact that, first of all, this is something that most folks, once you get past the jumble of numbers, most folks find pretty easy to understand. And second of all, it works. It's working, and it's working during a time when your instincts might say that you'd run out of money to pay the light bill.
Yeah, I think that the oasis that these 5 utilities have been versus the market. Notice these relative returns, everybody. Those are annualized numbers. I mean, if you'd have come to me 18 months ago and said, I think we should buy a handful of utility stocks, so that we'll be okay 18 months from now, I probably would have been a tough sell. But wow, this it's working out interesting. I can't wait to see how this goes over a little bit more of an extended demonstration.
Well, it gives me a little shiver, Mark, to think that are these stocks going to be less attractive as we move out of the bear market? I hope not too much less attractive, or else we might be in that situation of not being able to pay the light bill. But at the moment, we're generating enough cash, aren't we? It looks like we're almost a full year ahead in cash reserves, aren't we? Sure we are.
Pretty much,
119 times 4, yeah.
considering
Yeah.
what comes through, and we have what basically amounts to an extra couple $1,000s in the current value of South Jersey
Yep.
industry. So
Yep.
again, if we ever needed to extract some cash out to bolster this number here, it's certainly there, at least right now. So
Yep. Yep.
good, clean fun. Onward from there. Just a reminder that we do archive all of these sessions, including our roundtables, at the YouTube under the Manifest Investing channel. Please consider subscribing. We'd appreciate it, and we will let you know anytime new content is posted. I need to update that slide. Here's the scene of the crime where Cy Lynch's Atlanta Braves were sent golfing by the Philadelphia Phillies. That's actually a photograph, believe it or not. From and Cy is somewhere. Let's see, he's right over here somewhere. All right, we have time for a couple questions, Ken. We do.
I think so, Mark. Yep.
All right, we're going to try to take a couple from the mailbag. Here's one that I've gotten from a couple people, including Lucille. Do we show the relative strength index for a stock? And the answer to that is not directly, not yet. In keeping with my answer to Marty Eckerly, we hope to change that, and I will let you know as soon as I can, hopefully next Tuesday, what to expect. We do display them anytime we put out that thing like we just did for Decker's. Anytime we display that in the forum, and currently we do include the relative strength index on there. Keep in mind, however, that the relative strength index is available all over the place. Here it is from Yahoo, Finance Yahoo. This RSI stands for relative strength index. Keep in mind that the industry standard for the days of looking back at the price is 14. That can be changed, but 14 is basically what most people use. Keep in mind also that when you're looking at the relative strength index, it's incredibly sensitive to changes in price. So as something is shooting up or shooting down, that's what it's meant to measure, and it is responsive to that. So our stuff will be recent stuff, but again, it's continuously changing. So between that and stock charts, this would be my favorite if you wanted to look for it at a free site. Stockcharts.com is free. RSI on any company is shown just like is shown here. You can sneak up on it right now at Manifest Investing. What I did is I went into the stock screen and I basically limited it to discount stores. And I said, show me the RSIs less than 100, which is all of them. And you can basically look at the RSI for any company doing it that way. It's just kind of a backdoor way to get to it, because you can search, include the relative strength index as one of your screening criteria at Manifest. Why would you do that? You're looking for companies with an RSI less than 20 as being potentially attractive. Anything you want to add?
I find bigcharts.com pretty easy to use as well, Mark,
Sure.
giving you the same information. Yep.
Yep. And there's other places if people want to send in other suggestions, but yeah, there's lots of other places to find it. FinViz would be another that would be quite reliable and free, that sort of thing. Speaking of big charts, Ken, question.
Oh, there it is. Okay.
Where can I find a history of a company's price to earnings ratios? And basically keep in mind that anytime we put out one of our company reports, we do show that long-term trend of at least 10 years and include, if there are estimates in the future, we do include them. So that's here. That's one place to look. Anytime we put out a company report, that data array down the center of the page is a value line. 2006 through 2026. So you can check that out. And then, as Ken was saying, one of his favorite sources is big charts. And in this case, what I've done here, I think you do this too, Ken, switch it to monthly just to make it a little less noisy, and choose that PE range here. As you can see here, you can change out your indicator rather than look at volume. Switch it to PE ranges, and literally, I will do this for companies. If I'm actually doing a fairly deep dive on a company, I want to kind of look at this chart and just kind of eyeball, what does this general tendency look like, especially over the last 5 years or so.
Well, and you have 3 different choices that you can make. So you can even throw RSI onto the same graph by, instead of that none in choice 2, put RSI, relative strength index.
So that's a fairly useful thing to do. So that's where you can find a history of PE ratios for any company. So with that, I think I just left that one in there. With that, I think we can go ahead and shut down or field any questions.
We're right up to date on the question box, Mark. Not a lot of questions today.
Okay. So with that, everybody's encouraged to go out there and look for companies that would be on this year's list from Forbes, and keep an eye out for the Fortune list, and certainly let us know if you find it. We will be watching along with you, but more eyes are a good thing these days.
And if you find a list put out by some other source, make it available to the community. Let everybody know where the list is. Give us a link, that kind of thing. Just because we don't know that the source is there doesn't mean it's a bad list. I love going over lists and coming up with ideas. I think it's a great way to find great stock ideas.
And so that from Ed Harris and T. Rowe Price Jr., Gene Wilder, Sean, who's listening in the back room, probably at work today. We'll wish everybody better investing, and see you next time. Thanks, Ken.
Okay, sounds good, Mark. Bye-bye.